Alright, what's up guys? Promise you guys a review video today and going to give that to you. So we had a bunch of good setups today. We saw Harry said he had a good setup. Mido, I'm not too sure if I'm pronouncing your name wrong, or right, but he also had a great setup today. Slingshot shows a lot of the times, like a lot. Slingshot will show. So with that, we have to be extremely patient and not so jumpy to enter in and make sure that we are entering in on the right ones, right? So here we had this slingshot form, and this is kind of more of a scrappier because we did not get our break of structure and this was against the trend. But that is why we only go for 81's EQ for TP during New York AM and New York PM, just because it's so small and it's not guaranteed profit, but when it's reacting the way it does with slingshot, that zero low or the 0.11 to EQ or the high to EQ, that's $700 a trade. And that's plenty, more than enough for, especially with prop firms, right? So here we had our liquidity sweep. We did not get a break of structure, but we did get our inverse paired here with our gold back levels. And with this precision, this is all we talk about every single time. All we want to see is precision. We have right here, damn near to the T, our 0.11 paired with the end or bottom of this inverse fair value gap. So here with our liquidity sweep, we don't necessarily get a break of structure, but we get our inverse pair and we get this fail to go lower here. And you take your entry and you're right into EQ. You have your $700 trade in less than 2-3 minutes. And you could have risked your 10 points. Could you risk 10? Yeah, you could have risked your 10 and you would have been golden. And that, with how volatile the market was and it's New York, that 10-point stop's a lot smaller, but it still worked. Here, where I was taking my look, I got stopped out just because, with this slingshot, the reasoning for the win rate being so high is, following your stop loss tight. During Asia and London, I don't follow it as tight. I wait for EQ and all that to get broken. I've gone over, and I think it was in my last video for the slingshot documentation. Oh fuck, my slingshot documentation. And in that video, I went over a ton on how I follow my stop loss live and what my thought process is, right? So I put my stop where I know the trend is going to be done, right? So during New York AM and New York PM, I'm a lot more cautious and a lot more careful. So here I got entered in. We had our inverse fair value gap paired. We had our inverse fair value gap paired, and like I said earlier in the video, I was looking to be bullish just because of how, extremely bearish we were. I was looking to be bearish. I got, all this engineered liquidity here. We had this fake out liquidity sweep. We got our break of structure down here when it crossed past here, and then we had our inverse paired up there. So I got entered in whenever I saw it have a strong reaction down. I actually, not that I got lucky, because it wasn't really lucky, but I was waiting for it to hold off, and once I saw this candle close down, I knew we were good. So I got entered in here, targeted the equilibrium, because we're overall bearish, right? With the slingshot, we want to go with the trend, and with our bias, my bias and trend was bearish. We had our liquidity sweep, EL getting swept, our first reaction down here, trying to go lower. And then we got our break of structure, inverse fair value gap paired. And if we look at that CE, it's really, really close to our 0.11. Got entered in, it came down. I followed my stop through here. This is the way I worked my stop loss. So let me get this sticker for you guys. As I got entered in, I had my stop right here at this high. As soon as I came into profit, I put my stop down here to this high right here. We came down, and especially because we came so close to my take profit, I immediately put my stop right here at this high. And then in the next candle, it took me out, and that was a $250 profit trade. So losing trade, $250, not bad at all. Great trade, in my opinion. And on top of it, which works even better, and like I said last night, I said this to who I say it to. Let me look back to see exactly what I said. Was it to Zen? I don't know who it was exactly to. Give me 1 second. Here. So price will do what you're taught, but sometimes it'll be a lot scrappier than what you're taught. I kind of typed this out a little bit wonky, but this is, a good example of that movement. That's why trading is so hard. You have to find the best entry for the direction you think it's going to go without it hitting your drawdown. So that idea of price will do what you're taught, but sometimes really scrappy is just like this, right? So my whole slingshot and everything, if I would have wrote out my stop loss that was back here, I would have been golden and it would have came down to TP. But this would have been a headache and a heart attack trade. And not necessarily would have went good with my rules because I would have had to write it all out. And with slingshot, when it chops like this, majority of the time it's not going to run into your TP. Slingshot is a very fast and effective strategy. Either it's going to stop you out or it's going to take you to take profit. And a lot of the people who are finding success can vouch for that as well, because when they lose, it loses quick. And when they win, it runs the TP like a motherfucker. So following your stop loss tight is what's going to keep you profitable and is what is going to keep your win rate so high and take the pressure off. So that slingshot there comes all the way through here and demolished. It was a great slingshot trade, but couldn't fulfill the orders and stuff. But this was a good look. And overall, if 5 years down the road, 10 years down the road, you're trading your live account, and you could let that, and you're going for bigger moves, and you're targeting all the way across 81, because I had this fair value gap down here that I wanted us to fill. So the more comfortable you get with that strategy, you could target all the way down through here. And farther the target you go, the more you got to let it run, right? So long ball, right? That was long game. So we had scrappy slingshot here that worked. Great slingshot setup here that worked out. Could have rode the stop more, but that's just not for me or the name of the game with it. Right here looks like a beautiful slingshot. Let's see if it's paired with a gold back. Oh yeah. Once again, you had this retracement up into this fair value gap. It's not paired with the 81, but it's a really good look on the continuation trend. We have a liquidity sweep up here over this. We come back down, overall bearish. Could have waited for it to come back down and close and entered in off any of these, and it would have ran straight to TP really quick, 1 minute. You see what I'm saying? Real quick. Trends works the best. Let's see up here. No slingshot up here. Got a beautiful one right here. This was London, but this is with the 81, and you have your first reaction. Break of structure, liquidity sweep, all of that here. I would have waited for it to close past here like it did, and when it closed past here, what does it do? Run up and top tick into our fair value gap up here. So we had our engineer liquidity sweep, waited for the break of structure to happen. Break of structure happens here. What does it do? Run all the way back up and top tick into our 0.11 level and run all the way down to TP. Be patient, guys. Be patient. And, during my last week of break, I found that, waiting for the bigger moves and hopping in on those and the bigger trends is a lot better and a lot more effective than going for the quick, scrappier moves, right? Because sometimes you'll get a slingshot like this that's really small, really scrappy on the 27, and boom, it'll hit, it'll work. But with this, these returns are just insane, and just being patient and waiting for your structure to form, and you will see it happen. This is your edge of your liquidity right here. Who was I telling the engineer liquidity to about last night? About how it's going to be a little high, that is right before your fair value gap, and that it's going to sweep and then run back down. I mean, guys, it's right here in front of you. Just, I understand I may not explain it the best, and it's kind of like putting a puzzle piece together, but the more reps and the more practice you take at this, the better it's going to be.